Hey guys, thanks for joining us. Today we're here with Rod North, which you may remember from a previous video we've done. Michael's looking a little bit different, and we're practicing a little bit of social distancing, which I'm hoping all you guys are as well out there. And we're going to talk about what's happened since we last spoke and what's going on in the markets. So Rod, thanks for having us here.
Thanks for having me back, Philip. As you said, lots happened since July 2019, when the market at that stage was still in what we thought were the final stages perhaps of a bull market, as the market was rising towards 7,000. Remember, we reached our all-time high, which took 12 years, from sort of the bottom of the market, 3,109 in March 2009, to get to the all-time high, which was sort of 6.8. And then the next prediction that I was prepared to make back then was we would get to 7,000. I think I might have said then that we'd be there by calendar year end. You wouldn't believe it, I missed it by 6 days. I think 6th of January we hit 7,000. Things were still looking pretty good. The world was sort of powering, with pretty good economic growth happening in the US and also Australia. Obviously the Australian government was sort of thinking that it was going to either balance everything or get to a surplus. So all the news was just incredibly good. The market kept sort of building and building. But as I had said then, we were sort of at the mature stage of a 12-year bull market, and we're in the boom phase, which on the clock is between 11 and 12. And as I said then, you never quite know. It's like a stick of gelignite. The fuse is lit. You don't know whether the fuse is a long fuse or a short fuse. And of course, when we got to the defining moments of the Dow reaching its all-time high and also the Australian Ordinaries Index reaching its all-time high, around the 20th of February, the whole world changed because of one word: coronavirus.
Absolutely, it's making headlines, and who would have thought? Because the year started off, oh my God, you couldn't open your window anywhere. We had the bushfires for people that weren't aware. Even though it wasn't so close to here, the smoke definitely was. And then obviously there was, what was the Iran-US missile thing? So
that's right.
So this is going to be the black swan. No, that's going to be the black swan.
That's right.
And it turns out it's...
we never know what the black swan's going to be. That's the problem.
Yeah, it turns out it's someone having a bat soup. If you believe that story, I don't know. But it just shows how fragile...
In one of those wet markets, I think, wasn't it?
Who knows? Either that, or it happened at a place where there was a Chinese biochem... Whatever it was, it's out there and it's having an impact. And I guess when we spoke to you last, it seems the predictions turned out... I know I agreed with you for pretty much most of them in saying that we'd hit the all-time highs, the interest rates would drop. But I would have thought the market was going to keep running, to be honest, barring this coronavirus event.
Exactly, and I think every chance that it could have, because sort of the economics of where the world sat, particularly the US economy, which is one of the biggest drivers in the world economies, was looking good. Lowest unemployment, people back in jobs, businesses doing well, the big companies, the big airlines like Boeing and Tesla and all those companies, reaching all-time highs. But, as I said, it's qualifying the fact of where we are in a cycle. And when you're in a greed cycle, which we were, you never quite know when the party's going to come to an end, and you never know how many chairs are left for people to sit on. Of course, with the recent coronavirus contagion, it's sort of all bets are off. It changes things, and as we've seen things pan out from then, we have seen the market, drop. Very significantly, but in the context of history, that's not that unusual, because when a market cycle changes, and I mean the first thing we were thinking of, what's going to happen, is this just a very healthy correction? Well, we got down 5%, then we were down 10%, and then we were heading down 20%. And of course, when a market reaches 20%, fundamentally the market's changing from a bull market to a bear market. And then is this a sustained, bear market? Well, clearly we're showing all the signs of that, because we're now down, 33% effectively with the Dow Jones and the All Ords as of, just Friday, and then last night on the Dow. So that's quite a big drop. So then the question is, well, potentially how much will this market drop? And I've been looking at that closely, and a lot of it's a sort of day-to-day proposition, because one of the things we don't know with this coronavirus, particularly in Australia now, when it's going to peak. Are we still a week away, 2 weeks? Are we months away? That's the great uncertainty of this. So in the context of booms and busts in history, the most recent reference point is the global financial crisis, and we've got the crisis at the moment, being all about the contagion that's happening. So the question is it potentially worse than the GFC, or is it going to be better? So therefore, is the market going to come down more? Well, the interesting thing about that is perhaps the Australian government thought, let's just throw $17 billion at the stimulus and see how that goes. Well, clearly, since that was announced a couple of weeks ago, things have changed dramatically. In the context of the GFC, the Rudd Swan government at the time, Prime Minister and Treasurer, threw close to $60 billion at the market, and were probably criticised at the time for spending too much, because a lot of money, as we know, was wasted. Everyone got $900 cash bonus, but effectively a recession was averted then, back in 2009. The big question now is what will happen with our GDP, of which we've got the March quarter we're currently in and the June quarter. It looks like to me the March quarter is probably gone. That's likely to be a negative, but until we know the full sort of effects of what the government stimulus quantum will be, which is going to be announced very soon in terms of the second stimulus input, which is rumoured to be around the 60 billion, and there will be a cash component, because this is unlike the GFC, whereas this is affecting every business. This is affecting hospitality, travel, all of our businesses, and particularly if we all go into complete containment. And I see the analogy of an economy. If you turn the tap off of the economy and shut everything down, the risk you've got is when you turn the hose back on, you're wondering why the water's not coming out of the tap, because there's a kink in the hose. Yep. And it could take much longer. It could take 3, 6 or 12 months. That's one theory. The other theory is that if the virus is contained, in the next few months, we could see the market, turn around quite quickly, and it might be a relatively short-lived bear market. But of course, we don't know all the collateral damage and contagion effect of it around the world. It's just something we've never experienced, which in my view is probably very similar to what it must have been like in World War II. Not that either you or I can remember that, but particularly with shortages. And it's interesting, the psychology of people. People are behaving very strangely. And of course, as I said, we've gone from the boom, greed phase, to the bear market, fear phase. And people behave equally bizarrely in a bear market, fear phase as they do in a greed and boom phase. Yep. And there'll be things that will be so fascinating to watch. Will we have the same CEOs that ran companies over the last 10 to 12 years that will run companies going forward? The answer to that is maybe not. Many companies have been missing in action over the last few weeks or since late February as ASX companies, not communicating to the market. So if you're looking at a company and you've got shares and you're not getting any communication, you probably think the worst.
Yeah, naturally.
And I think that's sort of played out. So some companies' share prices have dropped 60, 70, 80%. And then finally they put out a communication and the price has just gone up a bit, particularly if its earnings are positive and it's got revenue. And, there's a way of trying to assess what potentially the damage might be to its earnings going forward.
Yeah, well, it seems like almost if you're not involved in somehow helping this coronavirus fight, to cure it, you might as well somehow work out a way to get into suspension. Or
yes, well, that's right. And that's an interesting point too, isn't it? Because there are a lot of companies that are in suspension.
Well, I've seen the trading halt announcements flying out, and like you're saying, I agree, they definitely need to be communicating, because it's just natural as humans, you assume the worst if you're not hearing what's happening. So you're starting to see those announcements start coming out, but there's still a lot of companies that aren't doing that. But one thing I don't think anyone predicted was this great toilet paper rush of 2020, as it'll be known.
Absolutely not. And the interesting thing about that is I actually played tennis with a guy who worked for Bowater Scott, and he said, Rod, I can take you out to their factory in Victoria and also in South Australia, and it's like its own postcode. There will never be a shortage of toilet paper, and as long as we see trees, there's no problem. So this isn't a demand-supply issue. This is just being able to get toilet paper, into all the supermarkets as quickly as possible. And in the same way with food, I mean, the figures that I've seen, we've got a population of 25 million. We have enough food in Australia to feed 75 million people. So you really don't need to hoard. But this is the behaviour and the psychology of people in the fear cycle. Well, they're not sure what's going to happen tomorrow, the next day, the day after. We're going to be in containment. Is it weeks? Is it months? They're all the questions that we don't know the answers of at the moment, but that causes people, to drive 3 or 3.5 hours into the country to raid the shelves of some country town. I mean, how crazy is that? This is crazy behaviour.
Well, it's one of those things you can never predict. I mean, I try to make future predictions of future trends, and the hardest thing to predict is like timelines and people's behaviour, especially when it's irrational.
Yeah.
Because you just don't know how people are going to react when it's there's no normal. I mean, nothing really ever is normal other than people have a routine, so they consider it normal, and we adapt very quickly to situations.
Yes.
But yeah, when it's happening very fast and there's a lot of fear out in the market, like you're saying. Actually, can you run us through a little bit, like the changes of on your chart?
Well, I will, because of course we were originally, you know, in what I call the boom phase, and that was we took quite a length of time from March, 2009 to work our way back through into the boom phase. And we got sort of between 11 and 12, and as I said, you just didn't know with the fuse on the stick of gelignite whether it was a long or short one. Well, clearly it was a short one, but you always know when you're in the boom phase of the market that at some point there's going to be a correction. I think it's fair to say, and you and I have discussed this too, that we thought at some point there would be a correction in the market in the US and in Australia, but not a black swan event that was basically going to take a lot of the gains away. And the analogy, has always in the share market, it rises by the stairs, falls by the lift well. And that's never been any different in every boom and bust that I've studied over 145 years of share market history. It's never been any different, other than, the amount of the fall and the amount of the time it takes to fall and the amount of time it takes to recover. They're all different in those cycles.
Yeah.
So we were very close to midnight, and we had talked about what happens, and you've got to be careful in that phase. And of course we saw the Reserve Bank continue to drop rates, which meant more money was coming into the market. Yep. The issue with that was a lot of people who lived off fixed interest and cash income decided to basically change their risk profile and then move into the share market. But I'm sure if we had said to them, before you do that, just think about the fact that you might be getting a 4, 6, 8% yield, but if you lost 40% of the share value of that company, would you still put your money in the share market? Well, in the light of hindsight now, over the last few weeks, a lot of that capital has been lost. So people actually changed their risk profile. They went from totally risk averse, thinking they could chase yield because they needed that income to live off, but unfortunately they've lost capital value on paper, either in direct shares or in their super funds. But the beauty of that is it's not great if you're in your 70s or 80s, but if you're in your 20s, it doesn't matter as much, because over time you'll eventually see that recover. So in my view, we've sort of worked our way right around, because normally when you come into a slowdown you see rising interest rates, but in this type of climate rates can't go anywhere but down.
I've been saying it for the last 5 years and people have been laughing at me, but it's on record, we're going to 0% by the end of the year. I didn't think it would actually happen this quick. I was actually getting a bit scared, but in the prediction, I guess you could say. But like you're saying, I think a lot of hot money flies around when they're lowering rates doing QE. It's not actually going into building infrastructure and businesses. It just goes into people speculating.
Exactly.
And now we're seeing, as quick as the hot air goes in, it goes out just as fast. And I think that's the big problem that we might be facing in future is
So we're now at 0.25%, because the Reserve Bank just the other day brought the rate down to that level. And then it also comes to, in this climate where there's so much uncertainty and fear, we've actually got to see banks be a lot more responsible as well and focus more on the customer. And we're starting to see some elements of that, but yet not all banks have passed on the full 25 basis points decrease
Can we name them?
In the mortgage rate. We can't name, but we all know who they are, don't we? We all know who they are. And that's not a good thing, because to me this has got to be a moral decision that's made, because people need help. People will not, if it's a sustained time period that people are going to be out of work, people won't be able to pay their mortgages, people won't be able to pay their expenses. So it doesn't help if you're not getting the full effect and benefit, say, of a 0.25% decrease in the cash rate. And of course, that's then meant that the Reserve Bank has had to kick in with quantitative easing. The government, the federal government, has to ensure that the stimulus is going to be enough, because their biggest fear is the last recession we had in Australia was in 1991. You really don't want to be a government of Australia presiding over the first recession in 29 years, and that's the issue. So I suspect that the current government will try and do everything in its power to try and avert Australia going into a recession. It's not going to be easy, and anecdotally what we're seeing at the moment is that it's not looking as if that's going to be that easy, but we really don't know until we see the stimulus, the second round of it. But who would have thought, like even a week or two ago. And this is a day by day, often hour by hour proposition.
Oh, who knows? By the time we publish this video,
it could all be changed. And it's the same way that it was the world, contained. Then now it's Australia contained. It could be states contained, because in Victoria there's only been one death from the coronavirus to date. So, there may be this siege mentality that develops over coming weeks where the borders are shut. Might be suburbs shut. You just don't know. So,
well, I feel like and this is, I'm putting my tinfoil hat on, as I often do. I feel governments are going to use this crisis. They're not going to let it go to waste. They're going to roll out their full dictatorial powers across the world.
Yeah.
We've seen in China, you've seen them even tracking people on their mobiles that have been infected.
Yes.
They're going to roll out the whole technocratic grid, I believe. I do believe this is coming, and this is a prediction we'll make. They're going to start blaming physical cash could be infected, and they're going to start bringing in their digital currency.
Interesting, that's interesting.
Which we've written about on small caps before, so do look out for that. But look, I do think they're trying to do everything they can, but at the same time, I think people are going to be giving up their rights while the government's trying to, they're making up these numbers as they go, like there's four people in a room to two or whatever it is.
Yeah, and it's been quite interesting that we really did have a good reference point, particularly we should have, and I mean, you can always be wise with hindsight, but just even in the last few weeks or months, we could have looked more closely at what happened in Asia, how they've dealt with trying to contain things in places like China, in Hong Kong, in Singapore, because they've suffered similar contagions before, including the bird flu and SARS. So we could have learnt from them. We thought it was crazy when we were seeing people basically soldered into their apartments in China, or everyone wearing masks. And Australians have been very complacent in adopting to that. And we thought, well, why are they doing this in Asia? Well, they're doing it because they know what bird flu and they know what SARS can do. So unfortunately, we haven't learnt those lessons as well, but people are starting to realise it. And because a lot of people have been now at home, working on their webcams and so forth, and we're seeing, because the weather's still good in Australia, whereas in Asia they've had their winter, which is never ideal for containment of a virus like this. We're coming out of summer, but we've seen lots of people on the beaches, Philip.
You've got to enjoy life. We're having a wine. We've got to enjoy it.
But awfully close to each other on the beach anyway. So you've got to look at the positives.
Well, I think it's that Aussie attitude, like she'll be right. So I was the same. Like I lived in a building where it was mostly Chinese people, and they'd often wear the masks and stuff, and I'd be like, why are you doing that? But like, I guess in Australia, when you look at on a global level, we've never really experienced tough times.
Nothing like this.
Like the fact that people are worried about gender pronouns and this other bullshit. It's like, I think you get to a point, like if you're worrying about that, you haven't experienced tough times. No. And I do feel like, not that you want something like this to happen, but it's going to reset people's values a little bit.
It will.
Like you were saying before, like profits over people. That's what's it's been.
It's got to be about customers. It's got to be about real people, how to help people get through this if it's financial. Because what will happen too over coming months, we will be behaving and working in a very different way with technology than we were previously. And it might mean, we don't need to be jumping on a plane every 5 minutes and flying to interstate to do business. We can just as effectively do that on FaceTime on our mobile phone or with a decent webcam. And it could actually change the way we do business forever.
Absolutely.
In respect to this. I think there'll be no coming back in some respects, and it might mean even things like planes, where if you're travelling in economy, you're sitting very close to other people, and if they cough or sneeze, maybe, you might see perspex dividers, develop. So industries like aviation could fundamentally have to change, the way they're going to present their product down the track to customers to make it attractive to travel.
Yeah, well, I mean, they're getting hammered at the moment, aren't they? The aviation.
Well, absolutely. I mean, we've seen their share price drop 80 or 90% because one of the biggest problems is where are they going to put all these planes? Someone needs to, get a concrete airstrip going somewhere. Yeah, so
pretty crazy times. Now, what was I going to say? With obviously.
One of the things that, when we go back to the clock, which is important too, is a lot of people, I think, will be thinking, well, we're seeing falling share prices. What's going to happen to property? That's going to be the very interesting thing, because normally what happens is when, and just think about it, a lot of people have lost a lot of wealth in the last month. On paper, some people have lost real wealth because they've sold out of shares. So we all feel a lot less wealthy. So that means we don't spend, we conserve funds, we don't have discretionary expenditure. We won't be going out to restaurants. Not that that's easy at the moment, but it just changes the way we do business. But interestingly enough, normally at the end of a boom, we do see a lot of that wealth go into property. So the big question will be what will happen, to the property market. It's going to be interesting. And we may even see that a lot of people decide, well, finally, if you live an hour and a half from a CBD, that's actually a very good place to be, particularly at the moment.
Yeah.
And those values in those areas could go up, quite substantially.
I agree, and what you're saying about with the technology change, I think this is speeding up what was inevitable.
Yes.
I had this chat with Jim Rickards. If you guys want to watch it, it's on the YouTube channel, discussing a lot of this coming, the future automation and things like that. And I feel like this is going to speed up things like whether it's working from home, automation, and even I've always questioned like why we have a 5-day work week, 9 to 5. Like I don't think people are that productive that way.
No.
Like all my guys, they all work from home, and we kind of do the hours to make it suit their life. And I think that's. I was actually caught up with someone else in our industry who's adopting a similar approach, and finding the actual people, they produce better results. They're more motivated to work.
Exactly.
And I feel like this is, as much as it's a bad event, I feel like we're going to learn a lot from it, and it's going to come out better.
Well, that's right. And if you've got trusted staff, they can be anywhere, providing they're doing the work they need to do. And if they deliver on their KPIs, then do they need to be in an office if they're trusted and if they can give the output that you expect in terms of delivering for your business? That's the main thing, isn't it?
Yeah. Well, it's going to be interesting times because obviously a lot of businesses are going to be impacted and things like this, and obviously, have to track it and see, obviously, like you're saying, the next few weeks to see what happens with the virus and what the outcome is. You want to put some predictions out there, or what's it?
Well, it's interesting because just in the context of where things are at. So if we had a Dow Jones that all-time high was reached to 29,551 back in February, my prediction is that I think, given that I'm seeing it in the context of the GFC, where the GFC, back in November 2007, we reached an all-time high of 6,800, bottomed in March 2009 at 3,109, so that's a 54% decline. Now, a couple of weeks ago, I would have thought this is not going to be like a GFC. This could be equal or worse than a GFC is what I'm calling at the moment, because there are so many more economic impacts of this. But the question will be, unlike the GFC, which took a long time for us to come out of over a couple of years, we could come out of this quicker potentially, but we don't really know that until the curve flattens and we start to see the number of people infected by the coronavirus around the world, and in particular Australia, start to drop. So we could see that Dow drop by 40% in total. We're currently at about 33%. So that would bring the Dow from an all-time high of 29,551 to say 17,800, or if we do see a 50% drop, that would bring us to 14,775. And say in the context of the All Ords, where we peaked at 7,225 back in February the 20th, if we see the All Ords drop at 40%, that would put us at 4,335, 50%, and dare it get there, and we wouldn't have thought this was at all possible, that would be 3,612. Our market's currently at 4,854.
I can't believe it's under 5,000.
It's hard to believe, isn't it? Because it took so long. It took 12 years to go from 3,000 up to 5 to 6 to 7, and then above 7, and it was looking like it could have gone further, which we talked about when last time we met. It could have got to 7.5 or 8. Other things being equal, if we hadn't have had this black swan event. So, but the big positive about all of this, and there is a positive and there will be light at the end of the tunnel, and history shows us this, is that if the market comes off 40 or 50%, that we'll see volumes ultimately drop significantly in the market, and that will be a very significant buy signal. But what we'll have to identify is which companies will be able to fight back quickly, either maintain or improve their earnings, and which companies won't cut their dividends. So out of the 2,600 ASX listed stocks, the clever work to be done now is to look at the impact, and that's why communication is so important for those companies to let the market know, almost communicate more than they ever have before. And that's why, with the work you do, the work I do, it's going to be more important for companies now than ever before, really ever in the last 10 years. Because if your company's not going to be impacted to the same degree, or you can recover quite quickly, you do not Philip, want to be the best kept secret in the share market.
100%. Well, we get a lot of emails and people on our social media writing in going, what's going on with this company, what's going on with that company, and it's hard at the moment to try to keep up and obviously give feedback. So I mean, it's on the company's onus to step up and
I was staggered because, of course, we're in communication like you, and the media and PR and investor relations and do all the digital stuff. I'm just staggered at how many, we sat down over the last couple of days and had a look at all the ASX listed companies, which ones had actually reported something, just anything, from about the 20th of February, and I was staggered at how many had been stone quiet. So I started calling a few CEOs and they said, of course at the moment we've got to think about our staff, we've got to think about our business. If it's an international business, we've got to think about all of that. And I said, you do need to think about it, but the other thing you need to think about and not forget is you're an ASX listed company and you need to keep the market informed. You need to keep your shareholders informed. And the answer was, well, we're crawling under a rock. Well, I'm saying to every CEO in the country, get out from under the rock and get your message out. Because if you don't, it'll be at your peril, and you may not be the CEO of that company in 6 or 12 months' time when we're in a bear market, that's then looking to work its way out and get back into a growth phase in the market.
Yeah. I mean, it's tough times. I'm sure like a lot of the CEOs, they're not familiar with, I guess, some parts of the market, or they haven't experienced something like this before, so I guess they're not sure what to do. But definitely communication's key, like in anything really. Like if things are going bad, whether it's business or whatever it might be, it's like you need to communicate it and let people know. Otherwise, like we said, they assume the worst. And shareholders are going to look for the exit.
And I mean, there's some companies we've looked at and we thought, why has the share price dropped 60, 70, 80% when they've still got, in some cases, hundreds of millions of dollars of cash? And all of a sudden, when they put out the announcement, the share price has kicked back up. And then you think, well, why didn't you put that announcement out a week or two back? And maybe your price might not have dropped as much as it did. And what happens is when people have to sell shares, they have a tendency to try and sell whatever shares they can. If they can't, sell bank shares or whatever they're trying to get out of in this climate, they'll then start and sell even some of the good quality ones that perhaps might recover quickly. So you've got to be very careful. Or I've had many people say to me, oh, well, the banks are cheap. But the thing we need to wait for with the banks is which ones are going to maintain their dividends and which ones aren't. If they don't maintain their dividends, it's going to be hard for them to do that. Their share price is still going to come down lower. So it is not a time necessarily to be buying back in to certain sectors. And the key, by listening to how you portray your business and what I do, is which sectors are going to be the ones that are going to recover. Because clearly aviation, travel, and hospitality and those industries are going to do it tough for a long time. But there'll be so many other businesses, whether it may be in health and healthcare, that are in their sweet spot at the moment, and they're the ones that perhaps are going to be the ones that will kick back quite quickly.
Yeah, no, it'll be interesting times to see where to put your money in next, I guess. One of the things I noticed though coming into this whole coronavirus thing is that it seemed like the economy was slowing down in certain parts already, like car sales overseas and certain other things. And then this is obviously Black Swan event happens. Now obviously there's the case of this thing clears up and we get back on board, it's all going. But let's play the angle. Things don't improve. Let's say there's another Black Swan event. I don't know, they fire some missiles or something.
I think that's happening, isn't it?
I felt like the Black Swan was going to be something going
Korea?
on. Yeah, North Korea, I think he's firing rockets again.
Last night.
Yeah, was he? Okay. I can't keep up. I always felt like something was going to happen between Saudi Arabia, Iran, sort of that region. Look, I don't want it to happen, but let's say something does happen. What's all this coronavirus thing plays out? What's things
to look out
that
for? Means that we're in a sustained bear market. And often it's very hard when a market drops 40 or 50% to recover quickly. And if some of those other Black Swan events do occur, and you've made some very good examples there, what has happened is people have gone from being bullish and confident and greedy to being fearful, and the market hates uncertainty. And the biggest problem we have at the moment is we do not know when the end is in sight with the coronavirus contagion. We do not know. Maybe in 2 weeks or 3 weeks we do, but we're seeing some positive trends in Asia that the bell curve has flattened. But that certainly hasn't happened in the US or the UK, and other countries in Europe have gone into containment because they're a lot closer together than, say, we are in Australia. But we still have a lot of issues to deal with here. And it's always hard to claw your way back. As I said, the share market rises by the stairs and falls by the lift well. So it depends on how far we fall, but we're going to be going up the stairs again, and that takes time.
Yeah.
And if we do have another black swan type of event, which could be going into a recession or the US going into recession, it's going to be very interesting to see how things will play out with the US elections, because you've got a president that we both agreed at the last time we met in July was probably looking like a shoo-in to be elected in November 2020. But what people will be doing in the way they're assessing the leadership of ASX listed companies is they'll be looking at how politicians and leaders around the world perform. And there have been some that have risen to the occasion like a souffle, and there are others that have been left wanting. And so the people will judge this in coming weeks, coming months, as to whether we've got the right people running countries, we've got the right people running companies.
Yeah, well, I think that's going to be the big one, because in the US, if people aren't aware, I think the Federal Reserve just lowered rates to almost 0%. They've got like one bullet left in the chamber before they're there.
Yep.
They're putting 1.5 trillion, I believe,
Yes.
in the repo market, which is basically just going to Wall Street and that kind of to keep things going.
Yeah.
So they're trying to do everything over there to keep things going. Like you said, Trump seemed like an absolute shoo-in.
Yep.
But now, you don't know what's going to happen, because it's the economy, like they say, right? If the economy's doing great, you stay in power.
He built his re-election largely on a very powerful Dow Jones that was getting very close to 30,000 back in February. The Dow Jones is now lower than where it was when he came into office. So that will be his greatest fear. Yet, the position in February was lowest unemployment in the US that's seen it ticked every box for the re-election of a president. And then, of course, we're getting close to seeing who he'll be coming up against, and it's more likely to be Joe Biden, and there's someone who's a very experienced vice president who's been in for 2 terms. So it's going to be a real contest, and it will be very interesting to see how that will play out. We'll know over coming months where that's going to sit. And it won't be good if US goes into a recession for an incumbent president. Generally, if you go into a recession, you probably end up with 1 term in office, not 2.
Yeah, true. Yeah, so it'll be interesting to see how that plays out. Because, I know people are making it all political online, but it's like, Jesus Christ, it's like relax sort of thing. But I guess that's the way they are over there. But it seems like I posted a thing on LinkedIn the other day, like all the central banks around the world lowering rates. So they're trying to get this thing going again. And I guess we'll see in the coming weeks or so what plays out with the coronavirus and everything else.
The other thing that's interesting too is the fact that because every day is a volatile day in the share market, we don't know. And I often wake up at 2 or 3 o'clock in the morning and check foolishly. Obviously, overnight the market hasn't closed at that time, but it's been the shock treatment over the last couple of weeks, because we're off 1,000 points, 2,000 points. And we've had a couple of dead cat bounces. They're going to keep happening. But one of the things that's always hard to know is when we're going to see that stabilise, when are we going to see the volumes, finally reach a certain level. But we still could have bad news that sees the market drop significantly overnight. And this is where, the Dow, will do a trading halt during the day. But maybe markets around the world need to consider over coming days or weeks about whether, the actual Australian Securities Exchange or the New York Stock Exchange actually go into a halt for either a day or a week or even a month. And that gives companies still keep reporting what they're doing, but it just smooths things out, so we take a bit of the hysteria out of it. Perhaps a lot of people wouldn't be happy about that, because it changes the free market where you should be able to buy and sell. But a lot of people, Philip, as you would know, have profiteered enormously from short selling stocks.
Yeah.
And when people short sell and the market comes down, that exacerbates the fall, because people are making money on the downside as well.
Pushing it further down.
And you have to be really sophisticated to do that, and you've got to be gutsy, because it can work against you, because you can wake up one morning and find, which is what's happened when we've had a few dead cat bounces, the market might have jumped 3 or 4%. And those people are obviously, on a short, and the market's gone up, which is not a nice call you get when you've got to cover the short.
I'd imagine, yeah. I can only imagine.
Not that I've been doing that.
I haven't done either. But if it did go into some sort of, I've heard the term economic freeze, how would that play out? Because I've heard rumours that we could be looking at a 2-week lockdown of things. And I mean, yeah, I'm usually a free market guy, but then at the same time, it's kind of like, shit, well, maybe it is better just to lock it just so these companies don't go under, I suppose.
Well, it may well be the case, because if we go into lockdown, as in from an Australian perspective, which means we're all confined to home, we're coming up to an Easter period, but we also have to be concerned we're coming off what's been quite a mild and warm summer, coming into winter, and that's when people start to get other sicknesses and flu and all of that. So it's going to be very hard to differentiate between what is coronavirus and what's not.
Yeah.
And the psychology of people will also mean there's going to be a lot of angst if someone sneezes, coughs, or touches you or whatever, more so than we've seen. There'll be no Bondi beaching or, Manly or, Sorrento, that's for sure.
No, well, I was actually at the airport the other day when I went to Canada, and I was having some Vietnamese food. It was really spicy. And my sinuses have started to drip, so I've got all these pile of tissues going, and people started looking at me funny.
You just don't want to sneeze or cough, do you?
Well, I bit into this chili and I couldn't help it. I went into this coughing fit, and let's just say I didn't get very polite stares. One guy stormed off.
Unfortunately, that's going to get worse as we go into the winter months. So here we go.
Cough, here we go.
Luckily, we've got a bit of distance here, Phil.
Yeah, so I coughed in the other direction. That's what you got to do. We'll see, I guess, what happens and what needs to be done with that.
So what the key is, we will have opportunity. I've always operated on the basis in financial markets over 30 years of looking half full rather than half empty. Things are not good at the moment, there's no doubt, but it will create the best buying opportunity since March 2009 at some point. And I think it will be this year, and that's when the index reaches around its bottom, which is going to be a market 40% or 50% lower than where it was in February 2020. But that creates the opportunity, because we know from 2009 to 2020, the market increased very significantly, well over 100%, in fact it's about 150% over that period. So any of those people that were prepared to buy when perhaps people were still selling in good quality stocks that were going to grow and have with dividends, they were going to make a lot of money over that period of time. And I know a lot of fund managers who have done this for many years, and the ones that are lucky enough to be cashed up, to have gotten some money out of the market. I also know some fund managers who actually sold houses recently, and they'll be looking to buy back into the market, but selectively. And I think one of the keys is, if you're going to put, say, a couple of $1 million back into the market, or 50,000, 100,000, you just wouldn't be putting it all in at once. You'd be drip feeding it in. Once you've worked out which are the stocks that are going to benefit from the return in the cycle, and that's the trick, really, isn't it?
Well, I feel like now's the time people can be doing that research, knowing that
we've got time on our hands, haven't we?
And you can play out certain scenarios. So if this happens, okay, these companies we should look at. If not, these ones. But just going back to that economic freeze, if someone from the ASX is watching, like if you could shut it down for 2 weeks, I'll get a bit of a holiday.
Please do that, it'd be good. Yeah, Easter's coming up.
Yeah, it'd be fantastic. But yeah, no, I think people, like you're saying, you just got to look at whatever happens, like have a stoic philosophy. I found is the best way to do it. It's like whatever's happening is happening, and just make the most of the opportunity. So, and
one thing we do accept, we're all a lot less wealthy. A lot of it's on paper. It's in super funds. I've had people say, oh, here's my super fund return and it's the 31st of December. Well, that doesn't reflect what the current position is. So, but you're in a super funds, if you've got a good investment manager there, they'll recover. Those gains will recover. You're much luckier if you're 20, 30, 40, 50 than you are if you're 70 or 80 and your super funds drop 40%. So if you've got youth on your hands, you're actually in a good position, because in history, in 145 years, the market has always worked its way back up and then gone beyond it. And it proved that again in in June last year when we reached the all-time high in 2019.
Yeah, well, we'll see if it gets back there and if it does, at what stage. And is there anything else you wanted to discuss today in terms of...
I think we've pretty much covered it all, but I think look at it from an opportunity point of view. There's so many opportunities now. Probably we're all feeling a bit shell-shocked. We've lost money on paper. We've lost real money. We're feeling less wealthy. But the economy will rely on people, Philip, on people actually spending money as well. And the government's going to have to help us in respect to that. To the main thing, and Australians are very good at working together. We saw what happened in the bushfires, when the whole world thought Australia was on fire because of how the news was portrayed there. And we're very good in tough times, and we have been in the history of Australia over the last couple of 100 years, and it should be no different. People should be helping people should be helping the elderly, people should be making sure they're not hoarding and we treat people with human decency. I think that's really important.
Yeah, I think that's one of the things we'll talk about where I think it'll come out better in the long run is we'll realise to help each other. I've never been one to rely on government, but that's just me. But definitely to help one another. Like even this, I was telling you this morning, my neighbour came out. He's got chooks and we've got chooks as well. But like he was offering eggs and just help each other out. I think that's
how good is that barter system though? You have some fruit and veg. You give them some eggs. I mean, that's just.
I've actually got a business idea around that, so don't say too much. But no, like definitely, you can help each other out however you can.
Yeah.
And look, I mean,
look after your fellow human being. I say.
Yeah, well, I think
health and that's more important, and relationships with people are more important than your wealth. At the end of the day.
I feel like sometimes you need these crisis events to realise that. So if there is a positive, I think that people are going to reevaluate their values and things like that. So if there is a positive to take from that, in the meantime, look after yourselves, enjoy some wine.
Keep healthy.
We don't live forever, so you might as well enjoy it no matter what's happening. So thanks for tuning in, and thanks for having us today, Rod.
And thanks for having me, Philip. It's always great to have a chat to you.
Fantastic, and we'll keep people updated with what's happening as things progress.
Fantastic.
Awesome. Cheers.
Thanks very much.